Ask Doug, understanding your global employer group insurance, excess versus deductible. Question. Hi, Doug. We are currently residing in southern India, and last week my wife and I were reviewing our international employer group health insurance plan when a question arose. Our insurance plan mentions that we have excess out-of-pocket expenses. We are familiar with deductibles, but not as much with excess. Doug, could you explain the difference between the deductibles and excess? Answer. Hi, Daniel. That's a great question. Here's information on the difference between an excess and a deductible on your international employer group medical insurance. A deductible is applied once per policy year and will be applied for all bills that year. All claims that you make in a policy year will go towards meeting your deductible. An excess is applied against each medical condition. Each new condition will have its own excess that will need to be met before the policy will begin to cover expenses. In the case of a condition that spans 2 or more policy years, the excess will only be applied once. On the deductible, 1 per person per policy year, resets each policy year. Multiple conditions in a policy year fall under a single deductible. On the excess, 1 per person per condition, resets each new condition. Conditions that go over multiple years fall under a single excess. Here is an example of how your health insurance policy excess works. In the event that you broke your arm, all treatment associated with that broken arm, including setting the bone, putting the arm in a cast, doctor visits, rehabilitation, any medication for pain or infection, etc., will be classed as being associated with that one condition, and so one excess would be applied. You would pay your excess, and your health insurance would pay for all other subsequent eligible treatment. If you subsequently have had an appendicitis and had to have his appendix removed, this would be classed as an unrelated condition to the broken arm, and all treatment associated with this condition would have a new excess applied to it. And once that was paid, all eligible treatment would be covered by the policy. Please note, Daniel, treatment in the U.S. may incur an additional 20% coinsurance. Daniel, I have also attached a PDF to this email with additional information about the excess on your international employer group health insurance. I am so glad you asked this question, Daniel. We are happy to answer any questions about our international employer group medical insurance plans, including plan benefits for your team members, claim submission, or any other administrative concerns you may have. Your global employer group insurance team here at GNI are in the office from 8 a.m. to 4 p.m. Arizona time on business days. You may also call us at 1-480-813-9100, or we can set up a video call meeting. We also respond to emails. groupservice@gninsurance.com within 24 business hours. Change is always in the air. Please check out our international employer group medical insurance options on our webpage at www.gninsurance.com/group-health for the most up-to-date information on your international insurance. Or call us at 480-813-9100, or we can set up a video call. Or email us at groupservice@gninsurance.com. Your GNI team here in Gilbert, Arizona wishes you and your wife safe and awe-inspiring expatriate travels in southern India and beyond, Daniel.